Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, October the 24th. The year's 2019. Let's talk trading. Your expectations must be real. I've been getting some emails from some traders lately, and I thank you guys for sending your emails and posting your questions out there on Facebook and YouTube and other locations. And I try to answer them all, and I try to answer them to the best of my ability. But there seems to be a common theme or thread running through them right now, and it's traders who want to trade, but they don't have the time to put in the chart time, the screen time, to sit down in their chair and face their trading platform. No, they want to place trades, go off to work, or do whatever they have to do and come back and see their portfolio grow. Now, let's think about it. Is that real? Is that a real expectation? You have to answer that for yourself. Now, one trader said that they placed five trades and I guess it didn't turn out well. And my advice, as you know, if you've been watching my videos, is you take one system, one method, you trade one pair, and you do that over and over and over till you master it. And I've shown that, my pair of choice is usually the dollar yen, and that's why I show you the dollar yen day after day after day to show you that there's profit to be made trading the same pair day after day after day. And then I even let you guys decide what pair. And I think what was it? Was it the Euro Aussie? We did, I think it was, let's see, this is October. I think we did that back in August, where for the entire month I traded a pair that I don't think I'd ever traded before, or maybe once or twice, but I mean, not on a regular recurring basis, and certainly not every day. But I showed how you could do that. But I guess that's lost on some traders because they want to juggle five balls before they learn how to juggle one. So I don't say that to be mean or rude. I just have to kind of hit you upside the head with the 2x4 to wake you up. So if you're not profitable at one, don't think you're going to be profitable trading five pairs. Okay? Now, that being said, if you place a trade, do you expect it to win every single time? Because some traders go, well, how can I avoid this? It breaks out, but it only breaks out a pip or two, and then it comes back in and hits my stop. And then, if I'm only taking a pip or two profit and it hits my stop and my stop is 10 or 20, then I got to make up all that distance. Well, yeah, okay. Yeah, that might happen. But you see, that's part of the reason why you have to be at your trading platform in the seat paying attention. Because you might have a trade trigger and all of a sudden it just starts going the wrong way. You don't have to let it hit your stop. There's no law that says you have to let the trade hit the stop. You can cut it at any time. That's the beauty of trading. You enter, it immediately starts going against you. You cut it off. So maybe it's a 5 pip loss instead of a 20 pip loss. Maybe it's a 2 pip loss or 3 pip loss because maybe you didn't time your entry just right. And I've showed you one of the ways to time the entry is you can hit that F9 key if you don't have my spread dots indicator, because I always try to show you a way to do what I do without you having to have my code, even though most of my code is actually technically all my code is free. Um, but that's a whole different topic. So I want you to just, write down your expectations and then You decide, are they real? And if they're not, then you have to change your expectations because the market's not going to change to meet your expectations. Your expectations have to be in line with the market because if your expectations are not in line with the market, you're going to have probably some losses. And you better make sure you have your risk and money management in place. And you better make sure that you don't lose more than you're willing to lose on any given trade. Now, fellow traders, boys and girls, remember these videos are for educational purposes only, and your results may differ from mine. And trading is very, very, very risky. And because of that, if you need financial advice and guidance, you should seek it from an accredited financial professional. That way, when you lose your money taking their advice or they lose it because you gave it to them to manage, you know it was lost by an accredited financial professional rather than somebody you listen to off of YouTube or some other site on the internet. Okay, the disclaimer's out of the way. So, somebody asked me to explain more about the above below indicator. It's an indicator I wrote, geez, I don't even remember how long ago. Maybe there's an edit in here that says it about, yeah, 2011. It's probably, I don't know if that's when I wrote it originally. Maybe I updated it then. But it's really a simple indicator. It tells you how many times price closed above or below the current price based on the number of bars you have. Oh, and one thing about the indicator, it looks at how many bars you have displayed, but of course, via inputs, right here, my bars, you can tell it to say, look at the last 100 or 1,000 bars, and in that way, you can see. So if you look at the last 1,000 bars, and we're looking at days, there were 719 days that closed above this level. And you see if you scrunch the chart, yeah, there's a whole bunch. But 1,000 days, that's what? That's over 3 years. Now, it's just under 3 years. 365 times 3 is over 1,000. But maybe you want to just look at, let's just say the last 100 days. That might give you a better perspective, which is what, about 4 or 5 trading months worth of data. You can see only 11 were above dollar yen, and if you kind of scrunch the chart in, you can see that. So, what good does that know? Or what good does that know? What good is it to know that? Well, it for me, it lets me know is price in what I call rare air, meaning has it gone up so high that chances are probably reverse because it's in rare air. It's up high. Or on the other hand, it might be so far down at the bottom, it's in the deep blue sea, it's going to come bouncing back. I'm trying to think, is there a pair that's like that? Yeah, like see, dollar Canadian right now, 89 out of the last 100 days closed above it. So you can see just looking at the chart, whoa, this is down. And if you scrunch the chart just a little bit more, you can see, well, hey, it was the last time it got down in this area, it came back up. So right now, price is, making a new low and reversing. So that's how you use the above and below indicator, or that's one way of using it. Just to let you know whether or not something's in rare air. Now that's just on the daily. Of course, you can go all the way down to M1 if you want. And you can see once again, if you were here, There'd be a whole bunch. So when this number gets down to the, you know, maybe 10% is is above, then you know, and 90%'s below, that would be up here, then you look for a reversal. And the same thing is true here. And when the numbers are even, then you know, hey, it could go either way. You can put it on the hourly too. And of course, you're going to get different readings based on it because you're counting these, you're counting either more bars or less bars or more time per bar or less time per bar. So your range. So if you do 100 minutes, that's less than 2 hours. You're only looking at this very small um, time slice. If you kick that up to hours, 100 hours, then you're looking at about what? Oh, 4 days, just a little over 4 days worth of data, you know, or you could even look at months if you want it. So it's up to you what range you look at. So that being said, we're going to blast through the charts. We're still in that upper weekly wick zone here. All gaps filled. We're up for the month, up for the week, down for the year, and down on the day. On the yen, you can see here we entered. Let's see what happened here. We opened. We went into that upper range. We came out of that upper range. We're now in the range of the first trading day this week. And you can see here we almost got in the first trading day of the month. So basically, you can see we're kind of range bound. We really are here on the yen. Not much movement. And on the opens and the range, we can skip over those charts because we've already seen that. We broke out of that inside bar, but now we're back into it, but we can break out of it again. Inside bar trades, once again, can be very profitable. The ranges, all the ranges happening in the pound pairs. We've got 7 pairs over 100. But looking here at dollar yen, we got a 25 pip range. I mean, you really have to grind out the trades here. But you can see there's opportunities to make 5 or 10 pips. Here was a holo opportunity here, the highest open, and here's the lowest open. There's opportunities to take those trades. As far as the buy zone goes, you can see with only a 25 pip range, the price still has to exit the buy zone, and it did right here to the short side. And the pivot was outside the zone, giving you not much outside, but it was definitely giving you a short bias here. You can see it didn't start out with nothing but scratch trades here. But then finally during the London, New York time, you can see we picked up some movement. Rat zone. Not much of a rat zone here. Some trader asked me why is his red zone below and his green zone above. I'd have to see your chart. I can't tell you unless I see it. On the pivots, we took out that pivot. We saw that right here. So missed pivots. We still only have one this month. Once again, if you want to trade and you want to walk away, you just might want to trade toward the pivot on a pair that usually covers the pivot. Price action, we can see here, even with the 25 pip range, price won't stay between 2 of these lines because they're only 10 pips apart. It just won't do it. Okay, here we go with the wick zone, in and out, in and out. Either you take that small profit or you don't. You let it turn into a loss. That's up to you. Trading across the line. You've seen that before. So, fellow traders, just remember, realistic expectations, because it's not what you trade, it's how you trade it. Go drain the banks.